You might want to bookmark this particular show because I'm going to be making a bunch of predictions. Well, at least a few. And I don't know. I seem to be a little bit on a roll with regard to predictions because the recession that is now pretty much baked into everybody's thinking is something I've been talking about for how long? So, yes, there was just like, well, I'll talk more about that in a few minutes. I just want to say another way I might have started the show today would be to just repeat my thumbnail, which is buy, buy, buy. What is the number one rule about investing in the stock market? When everybody else is running scared, that's the time when you should be buying. So this is the perfect opportunity. You can't call the bottom, but we're just about to 50 to 10% on the S&P. 55.32 would be that 10% mark, and we're at 56.65 the last time I checked. So we're getting very, very close to the 10% level. Generally speaking, I would say we have to hit that 10% level at this point. It seems that we pretty weird if it only went down 9%. Just another one of those psychological things, okay? But will we go through the 10% and go on to a full-on bear? We might. I don't think so. This recession is not going to be deep. It's not going to be long. And I think most of the serious players are going to understand that. You can't call the bottom. That's what I just said a minute ago. I'm going to repeat it. We might go full bear, but when you buy at these inflection points, it's almost always something that turns into a winner. Very high percentage chance. If we go down another 10%, then you can cost average. It's another great principle of investing. Now, none of this is investing advice because, of course, I am not a certified, I'm certified. Many people would say I'm certified. Anyway, not investment advice. For many years, I have been watching Stephen Mark Ryan talk about the coming day when it will just become obvious that the ICE car is just not anywhere close. You can't compare the ICE car to the Tesla or to other electric cars even. Well, you know what? We're getting very, very close to that day. Uh, the Teslas are so superior in terms of safety, convenience, the overall experience, and the environmental aspects. And the world will soon know this. And part of the reason is because of the upcoming less expensive vehicle. And then, of course, the cyber cabs. Well, in marketing, we've referred to this kind of a product cycle. When this happens, the day, the moment, the week, the month that this happens, it's called a tipping point. There's been many, many examples of products which have gone along for a very long time at a certain level. They've been flat, just doing fine, and then all of a sudden, the whole world kind of wakes up at the same time. And I think that the Model Y Juniper could already be that product, but when we come out with this new model, and see, I don't know what the new model looks like yet, or what the overall value proposition is, but I'm guessing that it will add to this proposition. And then the cybercab coming out, that'll just create more and more opportunities for people to see the benefits of electric cars. Well, anyway, I'm thinking that this is the future. A very short-term future is going to be this transition, this tipping point. Here's an example from Jason Dreimanis. He goes under the handle of JD Reimanis, Reimanis. I've never seen that name before. Tesla has a demand problem, he says. Too much demand from the discussions had at the Sydney Everything Electric Show. Easily, Tesla was the most visited stand by multiples. And what do you think was in that stand? Oh, there was a Cybertruck in that stand. We'll talk about more about that in a minute. Well, anyway, that's the good news. Otherwise, that's for me. There it is. You're done with the good news for today. Except, of course, with every uh, dark cloud, there is a silver lining, and the silver lining will be coming. But right now, let's start with Tesla Chan. He says Tesla China Domestic and export data for February was released. They exported 3,911 units and sold 26,230 for domestic demand, an extremely low month for exports. Well, of course, there's no Model Ys, no Model Ys at all. And that's, I mean, literally no Model Ys. This is from the street. UBS analyst Joseph Spack, who lowered his Tesla price target by $34 to $225. He might be prophetic. We're very, very close. 225 in a note published Monday sees the early sales decline, hitting both first quarter delivery targets and full year profit forecast. Our UBS Evidence Lab data shows low delivery times for the Model 3 and Model Y right now, generally within 2 weeks in key markets, which we believe is an indicator of softer demand. Spack and his team wrote, or the no existence of any Model Ys. Spack sees first quarter deliveries falling as much as 26% from fourth quarter 2024. Yes, that's probably true. And 5% from the year earlier first quarter. Maybe, maybe not. Even with heavier promotions likely providing an end of the quarter boost. There's going to be some promotions on Model 3s, but that's all. Not going to have to promote Model Ys, that's for sure. The boost, however, will add pressure to the car maker's overall profit margins. SPAC forecasts a gross margin of 10.3%, down a full 3 percentage points from the fourth quarter levels and 6 points from a year ago. That's not going to happen. AJ and I agree on this. Margins will actually probably be up. First quarter earnings, SPAC said, are likely to come in at 37 cents a share, 28% below consensus. No, they're probably going to come in higher than that. Again, I'm going with AJ's number. I think he's around 45. He also cut his 2025 delivery forecast to around 1.7 million units. No, that's not going to happen. We will be over 2 million units, a 5% decline from a year earlier and around 14% south of Wall Street's consensus. He says Tesla faces more margin pressure. While we do not expect the new lower cost vehicles to help volume, they do expect the new lower cost vehicles to help volume. We also believe this may take some demand away from the Model 3 and Model Y, midsize SUV, given our belief that this is a derivative of the existing platform. No, stop, wait. The new model will be coming out maybe at the end of May. Will slowly ramp up. The number of units that are going to be produced are not going to have any impact on Model Y, and maybe a slight impact on Model 3, but my guess would be we'll be selling all the Model 3s that we can even think about making because of the increased visibility of the entire product line. Further, given that the vehicles are expected to be priced $5,000 to $7,000 below Model 3 or Model Y, and we don't believe the amount of cost can come out of the vehicles, these new low-cost vehicles are likely to be lower margins. No, no, no. When the cars come out, they're going to be priced based on they're going to be, priced higher. They're not going to be $25,000 to start with, and they will have fine margins, except for the normal ramp problem. Yes, that's true. There's going to be the ramp issue where you're going to have lower margins in the beginning, obviously. Tesla shares were last marked 3.4% lower in pre-market. Of course, yeah, we already know about this morning's market. Tesla is down at way more than 3%. Okay, and from investing.com, on Monday, Redburn Atlantic reaffirmed their sell rating on Tesla stock with a consistent price. They didn't change their price target, $160. This will never happen. The firm's analysis suggests a challenging year ahead for the electric vehicle manufacturer due to anticipated stagnant sales volumes as no new vehicle launches seem imminent. What? Concerns were also, they just released the Model Y, and they have another. Concerns were also raised regarding the potential impact of sluggish vehicle registration data, which might indicate ongoing demand issues. According to Investing Pro data, Tesla's stock has declined 35%. Because what? Because the entire market has gone down, and because Tesla was way over its skis earlier. Tesla is expected to face by the way, we're still up from 6 months ago. Tesla is expected to face cash flow pressures as a result of increased inventory levels. How can that even be? They have $34 billion in the bank. And could they have a negative of free cash flow this quarter? Possible. I don't know. Probably not. As a result of increased inventory levels, leading, they're not going to have increased inventory levels. They're going to have decreased inventory levels because they'll be selling every Model Y that they can get their hands on. Well, investing, this is the worst analysis. I'm not even going to keep reading it because it's such a horrible analysis. I'm going to skip the entire thing. I'm sorry that I even read the part I read. That's the most ridiculous analysis I've ever seen. They're cautious, they say. Okay, Tesla's average selling price has decreased, whatever. Times of London. This is a super interesting article. 1/5, 20% of drivers say they will never buy an electric vehicle. That's the headline. Wow, that's fantastic. It's down to 20% that will never drive an electric vehicle. That is a great number. Holy mackerel, because they fear abandonment by government. What? So governments are planning, I wonder if this is a European survey. So the European governments are, of course, saying no petrol cars will be able to be made after 2035 or sometimes earlier. So polling of 14,000 drivers by AAA reveals, well, it says AA, reveals that those happy to make the switch to electric vehicles fear they will be left to navigate a complex and fragmented infrastructure with little help from the government. This sounds like, I think this is a European survey, but it's good to know. I think in the United States, more than 20% would say that they're never, ever going to buy an electric car. Despite the plan to ban the sale of new petrol and diesel vehicles in 2030, yeah, this is Europe, about 22% of drivers questioned said they would never get an EV. Further, 20% said they're still planning to buy petrol next time. Even the 52% of drivers broadly supportive of the switch were concerned about the cost. And AA figures show that the average cost of a new EV was £59,216 compared with $46 for a petrol. One factor on drivers' reluctance to adopt EV was a lack of understanding of government policy. Man, these Europeans need to get away from their governments. 73% had never driven an EV. 1/3 thought that manual EVs would be available when all EVs, of course, are automatic, have, generally speaking, no gears at all. They only have one. Anyway, yeah, interesting. The AA has recommended the government run a concerted information campaign. What about Tesla running a concerted information campaign? Sawyer Merritt says Tesla is trying to launch the Cybertruck in Australia, according to Tom Drew, Tesla's country director for Australia and New Zealand. The only product we're missing at the moment that we really need down here is the Cybertruck. We're in conversations trying to make that happen. There's something that we are trying to influence. There's still nothing here that is a real workhorse, a full EV that has the range and capability that Cybertruck does. We think there's a gap in the market that still needs to be filled, according to Drew. Under his leadership, Tesla Australia has launched and now expanded a campaign to bring Cybertruck demonstrators down under. And of course, at the show this weekend, they were showing the Cybertruck. This, by the way, is Randy Kirk. I'm super optimistic. I am so optimistic. Sometimes you have to cut into the patient. I know this personally. Sometimes you have to cut into the patient to save the life of the patient, and it hurts, and it's a problem, and you have to suffer for 3 months, and then you're full of vim and vigor, even at almost age 77. I'm going to call it right here, though. The Fed may panic next week, and hopefully they do, and cut. So I'm the first guy. Well, that's not true. Turns out that there's a fair number of people that the odds makers are saying there's a chance of a cut next week, and the odds for May are very high. I think the Fed is going to say they're going to look at those numbers out of Atlanta. They're going to look at all the different reports that have come out the last 3 or 4 weeks. They're going to look at President Trump's statement and Secretary Besson's statement, and they're going to make the cut next week. Also looking at the stock market being down probably 10% by next week. As you know, I started saying the country was at least 50% likely to have a recession several months ago. You can't have an economy that is propped up by government spending and adding government jobs month after month after month, quarter after quarter, and then stop it completely and reverse it and actually start laying off government employees and reducing government spending without that having a huge impact on the overall economy. So Scott Bessent said the other day, look, it's going to be a rough road. President Trump said yesterday, No, I'm not going to rule out a recession. And the Atlanta Fed, anyway, I now might raise my bet on a recession. Well, to recessionary months to 100%. There will be recessionary months. I don't know if it'll last for 6 months so that we get a technical recession. Maybe, maybe not. The rebound will be brisk and the quality of that rebound will be fantastic. But wait, this is the other thing to watch for. President Trump's popularity is going to go down. His polling numbers are going to go down. Doge's popularity numbers are going to go down. Reagan was super unpopular for the first 2 years of his time in office because the cutting was deep and the cutting was rough. It was hard on the folks. Well, this is going to be a lot shorter, and his popularity will rebound and be higher than ever when things pop later this year. The Daily Beast, I don't think I've ever quoted the Daily Beast, but they're quoting Fox News, so I don't know. Fox Business host Maria Bartiromo claimed Friday that any big downturn in the economy would be Joe Biden's recession. And you just heard me making that case. On Mornings with Maria, she and Fox host Charlie Payne discussed the possibility of a dire financial situation looming, with Payne first declaring that we're already in a labor crisis, just one which isn't evident yet, but will become evident. People are leaving work and no one is being hired. And that's what the ADP jobs report backed up, Payne said. Also, work hours are getting longer. Work hours are getting longer and wage growth is getting slower. Actually, work hours were cut. And that would be, yes, Payne was wrong on that. That's where the labor crisis is going to show up, and that's where it's going to start hurting us. Friday jobs report from the Bureau of Labor Statistics showed 151,000 jobs in February, less than expected, with unemployment raising from 4 to 4.1. Unemployment in the federal government declined by 10,000, obviously giving the so-called Department of Government Efficiency's sweeping cuts are causing that. After Bartiromo said that several potential interest rate cuts by the Federal Reserve would bring a recession, Payne claimed most people are already in a recession. Yes, Bartiromo said several potential interest rate cuts would bring a recession. No, what does she mean? Somebody's misquoting her there, I'm sure. Payne says most people are already in a recession, considering just 10% of the population is buying 50% of the goods, and all the so-called excess cash is long gone from the bottom 75% of this country. You've heard me and Larry talking about this for over a year. Payne added, when I went to the polls in November, when people went to the polls in November, they were in a recession. That's why they voted the way they did. Payne contended that the metrics used to measure the economy's condition need to be re-examined because they're way off. I agree, 100%. Bartiromo responded, we'll see if Joe Biden's recession shows up. After the commercial break, Bartiromo agreed with former 2016 Trump campaign advisor Stephen Moore, who insisted that Donald Trump inherited a god-awful mess from Biden. And that's my point. What Biden did the last year in office, actually the last 2 years in office, was criminal. Just criminal. Should have taken his recession 2 years ago. Should have allowed the recession to happen. Not done those stimulus. Should not have hired all those people. Should not have grown government the way that he did. Should not have ended up with 7% deficit. Horrible, terrible, headed to bankruptcy, headed to a heart attack. Time to cut. You have to take the heart out, put it on the table, finish the operation, put the heart back, and get that guy pumping again. All right. World Hall of Fun. He says this: Russia has banned George Soros's foundations as a threat to their constitution and national security. Hungary has passed Stop Soros laws. Pakistan shut down the Soros Foundation. It's time for the U.S. to follow suit. Soros is a domestic terrorist and must be banned. Not sure we can do that from a First Amendment standpoint, but there are probably corruption taking place that he could be stopped. Did I say probably? There's definitely, clearly seems to be corruption. By the way, the VIX is at 26%. I'm sorry, 26 this morning. The Russell is up strongly in this down market as smart money is moving into the mid caps. So there you have it. Let's see where the market is right now. We have the Dow Jones down 87, sorry, 0.87 at 42,431. The NASDAQ down 3% to 17,643, and the S&P down almost 1.87% at 5,662. Remember, 55 something, I forget the exact number, is where we get into that 10%. Tesla is down 8.86% at $239.39. Apple down 4%. Google down 4%. Meta down 4%. NVIDIA down 4%. Yeah, so yeah, it's a rough morning today. This is capitulation, but we're not done. I don't think we can be done without a full 10% on the S&P. That's just me. I could be wrong. Okay, Cathie Woods, of course, all down except for Square is up 0.67%. There you go. Square is moving against this trend. By the way, the trend overall and every single case is bottoming out. So this might be it for the day, and we might actually recover some of this because you get what? You get the bottom fishers coming in, which there's nothing wrong with being a bottom fisher on a market like this. I hate bottom fishers when it comes to people that come in and try to steal your house, but a bottom fisher in a market, no, there's nothing wrong with it. It's called smart. That's what it's called. Okay, let's go see how let's see if the bonds are doing what I want them to do. They don't always do what I want them to do. Why is that? I can't figure it out. But what they're doing right now is, yeah, they're doing what I want them to do. We are back down to 4.219, down 10 basis points, 4.217. Come on, let's get back under not get back. Let's get under 4%. This would be a signal. This would be where we would begin to see the turn that we need. The 2-month is actually up 0.3%. The 2-year is also down 8.6%. All right, so this is very good news. Let's hope that continues today. Let's go ahead. Now, you're going to read, some people, there's a big question. Is the bond market leading or is the bond market following? Right now, the bond market's following. The bond market's saying, oh, the Doge cuts are working. Oh, the economy is looking like it might go into recession. Oh, things are soft right now. Therefore, they're going to, people are taking their money out of equities and putting them into bonds. As they put their money into bonds, and Secretary Bessent has said, I'm not going to increase the numbers. I've told you what the numbers are going to be. This is how many bonds I'm going to be selling, and I'm not increasing. Well, that tells the bond market there's only X number that they can buy. And if they only got X number they can buy, then all of a sudden there's a little FOMO setting in, even in the bond market. You're going to see this. So they're buying them up. When they buy them up, then the interest rates go down. We have oil continuing down to $66.51, down 53 cents this morning. Brent also down a similar amount, under $70 a barrel. Now we will be going down another $5 or $6 a barrel on both of those. Natural gas is actually up again today, up 2.11% at $4.49. Gold has ticked lower, only by $1. So it's still at $2,912. Silver also down only pennies at $32.65. But, that's under that $33 where it's kind of been hanging out. Copper down 0.79% to $4.67. I would not expect copper to drop much more. All right, we have got Bitcoin at 3,000 down, sitting at 79,691. So back into the 70 handle. We have got, that's it. Actually, that's all the things that we cover and talk about. Elon Musk is saying this is crazy this morning as some Tesla vehicles were torched overnight up in Seattle. It is crazy. And I think anybody who is promoting this should be executed. Yeah, no, executed. They should go to jail for life or be executed. Anybody that's promoting violence or terror, they should put them away for life. You can't have people walking around doing terroristic acts. You get people lighting vehicles on fire, these can turn into burning down a city. It doesn't take much to go from a vehicle fire to a major, major problem. Anyway, that's my position on the subject. How do you feel? Let me know in the comments below. Are we going to go into recession, or will it just be a couple of months, or 3 or 5 months, maybe be less than 6 months? Do you think it'll be a recession, not a recession? Do you think that the Fed will cut next week? What do you think about that? Do you think that they're going to get it early this time instead of late? Do you think that the bonds will continue to rally and therefore the interest rates are going to drop down into the threes pretty soon, maybe as early as this week? I'd love to hear what your comments are on all those subjects. And where was the market going to go? Are we going to correct at 10% and then sit around 10% for a few weeks and then, down and then start moving back up again? Because the market is usually 6 months ahead, but this time they're not. The recession we're basically in a recession. Okay. We've been in a rolling recession, as Kathy likes to call it. I call it a half the country in recession for 3 years. But now that the government is no longer propping it up, what's going to happen next? Do we need more than the 10% correction? And will the stock market have a V-shaped recovery because they'll recognize that once we get through this dip, that it's going to go up and to the right? That would be my call. So we might be looking at a month before things start taking off. End of March, middle of April, maybe even the end of April is when things will start to really take off. Okay, what am I leaving out? Going back and looking at Tesla one more time, down $23, still sitting at 239. As I mentioned, right now, everything is flat at the bottom. Last night, you want to take a look at the video I did last night where I answered your questions. So I'm going to put that one up. I think you'll enjoy that one. And then what have I got coming up today? Not a normal day. We've got Larry Goldberg. He'll be on fairly early today, probably about 3 o'clock, 3:30. And then I goofed up on Saturday morning and I put the wrong video up. So tonight I'll have Phil Beisel. And then I guess he pronounces it Beisel. I keep getting it slightly wrong. And then Brian White will be on Tuesday night. So that's what we got coming up. So please hit subscribe and notify and all that stuff and join Patreon. That would be a blessing. Thank you so much. And it's been great talking to you.